some people, especially central banks that are non-US, are realizing that the dollar may be under pressure in future, either through expropriation, that the reserves are taken away, or that the debt is not repaid, or that the currency continues to lose its value at an accelerating rate, in other words, through inflation. And so some people want to own physical gold because they think that in an emergency situation, it may be useful to have. I think the tariffs are a complete disaster for everything and everybody involved, not just, foreigners or China, or it would be difficult to say that anyone will benefit from tariffs, except maybe a few crony capitalists surrounding Trump that get an exception of this or that. But in general, for the American public, it's a disaster because it will increase the price of goods and services. And it's interesting that after 200 years of economic theory, starting, say, with Adam Smith, The Wealth of Nations, we are reverting essentially to measures that were used in the Middle Ages at bridges and tunnels and so forth to make trade more difficult and to collect taxes. Tariff is nothing else than a tax. So when Trump goes and says, I'm going to cut taxation, no, the tariffs are a tax. Well, I think that the economy, and I've maintained that for the last 6 months, was in a recession already. Now it's obvious that we have been in a recession in the first quarter, but it's probably worse than what they say it is. And my concern is that earnings will begin to disappoint. And my concern is that the valuations are much too high in the United States. I'm not saying that Hong Kong property stocks are expensive. There are always exceptions. And also foreign markets tend to be cheaper than the US. But say the Magnificent Seven stocks in America are, in my opinion, grossly overvalued. I think that the dollar has far more downside risk than is perceived by the investing public. And therefore, in theory, the US could print money and keep the stock market up in nominal terms. But if at the present the Fed prints money and cuts interest rates, I suppose that the dollar would weaken, and the dollar weakness could exceed the price gains on the stock market. In other words, you may make some money in US stocks, but you may lose it massively on the currency. I think that's a possibility. I think in real terms, we've seen the top of the market in the US. I call it the Trump top. My view about him is he doesn't know what he's talking about. I'm sure someone in the administration suggested that maybe a solution to the problem would be to revalue gold massively, to say $10,000 an ounce. But I don't see how the US would do it without first checking precisely whether they own any gold. That is a big question. How much gold does the US still own? I don't think they will audit Fort Knox. Maybe they know that it's not there or whatever. My view would be there's significantly less gold at Fort Knox than they claim to have. And if the public, say tomorrow, you read in the Herald Tribune and in the Wall Street Journal and everywhere that Fort Knox has no gold. It's all gone. In my view, this would be disastrous for the US dollar. And the price of gold, in my view, would go through the roof. It is impossible to say what is the value of something in a monetary inflationary period, because I can give you a speech now for say 20 minutes on why gold is grossly overvalued, because I compare it to say wheat, corn, soybeans. Or I could give you a speech and say that gold is grossly undervalued still when I consider how many individuals own gold, how much money there is in the world, the monetary quantity of all the countries, the debts of all the countries. I can make both cases, and I cannot tell you whether gold is cheap or expensive. I can only tell you that the ownership of gold is probably an asset that is relatively safe, because it's not a liability of someone else. You understand? If I have a bank deposit or I buy a bond, someone owes me money. but not if I keep gold and I store it in my garden or in any place in a safe deposit box, then I think that it's relatively safe. Not 100%, because the government can declare it to be illegal. The dollar as a reserve currency is finished anyway. The question is today or in 10 years' time, the days of the US dollar being a reserve currency, and maybe the whole financial system will change in the sense that they are no longer reserve currencies, or that we move back to a gold standard or to a standard of cryptocurrencies, or I don't know. But I wouldn't bet that in 10 years' time the dollar is still a reserve currency. That I wouldn't bet. A war could weaken it, or debt default. The only reserve currency that has remained throughout history is gold, silver. At the times of the Roman, an ounce of gold or an ounce of silver, I'm not saying it was a good investment up to today, but you still have the ounce of gold and silver. Whereas if you bought properties in Rome, the Vandals made sure that it doesn't exist anymore. The Fed would make reserves available that people would get some money, but they may not get 100 on 100. It depends on the nature of the deposit. You may only get 50. In Cyprus, they closed the banks. They got 100,000 and everything above 100,000 was worthless. It is scary. That's why when people come to me and say, well, I'm very bearish about everything, I have all my money in cash, I tell them, cash may be the most dangerous thing to own. Because if you own a share in, say, I don't know, Triple M or in IBM or in Google, you own the ownership of a company. And usually that is not taken away from you, or it keeps some value unless the company goes bankrupt. But say I look at Germany, 1900 and today, there are lots of companies that existed in 1900 and the shares are still worth something, but cash was worthless 3 times. My view is people own gold ETFs. The more people own gold, the safer gold will be, because it's politically for a government very difficult to take away something that is owned by everybody. It's difficult to go in the US and tell people, well, now your properties, we, the government, are taking it over. They can take it over indirectly by bankrupting the homeowners first. Then the homeowners have to sell it to companies like BlackRock. So the ownership shifts from the private sector to the government sector. Well, I mean, it's terrifying that the government could lock in people during COVID, but it happened. Nobody thought it would be possible in a democracy, but it happened. I think the next government or this government would tell people, well, you have to stay home for this and that reason. They'll find an excuse. My advice is always diversification. You need to own assets in, say, real estate, and you own assets in stocks and some cash and some precious metals, and don't overtrade. Don't speculate in gold, but acquire gold and silver and platinum as a store of value that you keep for emergencies or you keep for your old age or whatever. But don't speculate in gold and silver in the futures market. Then you get a margin call and you have to sell out at the wrong time and you lose all your money. You understand? I think people should get away from the view of get quick schemes, in other words, overnight wealth creation to long-term wealth creation. But I really think that the environment at the present time is not favorable for making money. People should think how to avoid major losses going forward. In other words, you have to have some risk control and you have to be patient and prudent. I'd be very prudent at the present time, because the more the government intervenes, the more difficult it is for the individual to understand what the government's objectives are. And Trump is an unpredictable character. He changes his mind all the time, and it makes life for investors rather difficult.